some people are like, we're in a bubble. Prices have gone up 100% or 50% or 75% since COVID. The last time that there was a big bubble was the great financial crisis. Do you get to see from the lending side? Are you seeing any similarities at all?
I was sitting at my desk and I watched this no job loan come across my screen.
What could go wrong?
That is the number one issue I see right now.
When do you refi? Is there like an easy thing for people to know?
No, I'm really glad that you asked that question because that's a misconception. It all depends on the and that is the biggest factor. Unless you believe that we are in a bubble and the market is going to tank. If you believe that, then it's probably not a good strategy.
We see it all the time on the agent side.
That is probably bad news macro-wise.
Yes.
You are now tuned in to Only Agents by ASG Luxury Realty.
Welcome back to Only Agents. As always, I'm here with my partner, the S to my A.
Yeah.
The S in ASG, Alan Schonbrun.
Well, the good thing about us naming it ASG is in case something happens to Stefan, it can just become
This is
Alan.
his favorite go-to joke.
It's the Alan Schonbrun group. So whenever Stefan gets out of line,
Yeah.
you know, I threaten him with the bat. So
It goes both ways, though. It could always be the Alvarez Stefan group, too. Yeah. So we've got so much protection and security here.
Right back at you.
But yeah, so we're back now with episode 2. And, you know, the idea for this podcast was to talk about all things life, community, marriage, business, and to me, I feel like the core of all these things in life is real estate. And today we are lucky enough to be joined by one of the pillars of Tampa real estate, Jane Floyd, the founder of the Jane Floyd team at NFM Lending. So welcome, Jane.
Well, thank you. Thank you.
Thank you for joining us on Only Agents.
Honored.
and real quick,
Absolutely
we
honored.
have a sponsor.
Yes.
Last time it was AG1s, but this time the country of Germany is sponsoring us. And in particular, the Rieslings that they make. And now I know we've had some differences with Germany in the past, you know, the wars.
There's a war
But
or two.
I'm able to look past that because they have a Rhine River region that makes the best off-dry Rieslings. And I don't know, Jane, if you have had any off-dry Rieslings.
No, I'll let you introduce me. I'm a red girl.
But
You're a cab girl, right? California cabs?
Girl. Well, I like Italians.
Yeah.
Okay.
And I actually, I was first introduced to Jane at Crew Wine Cellars.
Oh, that's right.
You set up our first date at Crew, and I think we just drank French wine that night.
Yep. And talked about wine all night long.
We
No
did.
real estate, no mortgage.
No, that was a great night.
Yeah.
That's what we're going to do after this episode, is go have another wine night.
Yeah. And then before we get in, I was also going to say, Jane, do you have a twin? Because you are literally everywhere in Tampa. You have met my mom recently. So my mom called me the other day and she's like, I sat next to the most wonderful lady and she knows you. Her name's Jane Floyd. I'm like, of course you met Jane Floyd. You also know my brother. You've worked with him at Baird.
Correct.
And I don't know who else you've met that I know, but
I mean, Jane knows everybody.
Yeah.
Well, I
the
think
Tampa
that just
community.
happens, right? And when you're in the community and that whole 6 degrees of separation, you know, just that was
Yeah.
an amazing moment knowing when it hit me. I'm sitting right next to Alan's mom.
yeah.
Yeah.
Well, you're also the Energizer Bunny. I mean, we drop the kids off at school at like 7 a.m. and I see you walking out of your building, usually on the phone, probably talking to Caitlin to get the day started. But then you're nonstop, right, throughout the day?
I am pretty much, but I will tell you, I take a lot of buffer time, a lot of quiet time, a lot of planning time, right? Otherwise, that leads to burnout.
Yeah. Speaking of that, should we jump into kind of like, I don't know, how the Jane Floyd story began and how you ended up in the Tampa Bay area? Because we are so lucky, I feel like, to have you in the community.
Oh my goodness.
I'm not even sure how long you've been doing this.
So I have been, well, you probably don't even know this either, Alan. I was actually in real estate for a minute.
That makes sense, though. You know a lot about real estate. So.
Well, I'm obsessed with real estate, truly obsessed with it.
Yeah.
But I landed in Tampa 54 years ago now after my father passed away. And so came down here knowing nobody. And then it's so interesting too, when we talk about the real estate market. I thought about you guys this morning when I was thinking about this, thinking about real estate and thinking about where the market and the different areas in Tampa. So my mother knew one person, her aunt and brother-in-law, And so she was introduced to Town and Country and to a house by Steak and Shake in the Plant District, knowing nothing.
Oh, yeah.
This is 54 years ago. Financially, she made the wrong decision, but so I grew up in Town and Country.
I was gonna say, I know where this is going.
You know where this is going.
You did not end up living next to the Steak and Shake.
I did not live
Wait,
there.
that Steak and Shakes
just
has been there for 50 years.
yeah.
Oh, yeah.
Like that long.
That's a
But
landmark.
it wasn't right next to it. But the interesting point is in Tampa, just getting back to real estate, like the values and where the different areas have gone. And we just unfortunately sold her house because she's 95 now and has
Oh, wow.
dementia. We just sold her house this year. So that house would have sold for 3 times the amount as she would have bought the one near Plant. But just
easily.
it's so interesting.
I know it is interesting, the micro markets in Tampa.
Exactly. Yeah, exactly. And then, you know, how I landed in real estate actually when Kellen, my older son, you know, Dylan well.
Yeah.
I don't think you've met Kellen yet.
I don't think so. Or maybe at one of your events. Maybe.
But I was in restaurant management and I stayed home for 2 years when he was born. And then God did put me on the earth to be a stay-at-home mom. So I got my real estate license.
Oh,
And then
okay.
that was super
like what
fun.
everyone does when they're
Like what everyone
Yeah.
does. Yeah. What can I do? Get your real estate license. And then I went into title. And then honestly, I literally was going to, it's been 34 years now. I keep saying 33, but it's going on 34. I got into the mortgage business because I was going to go to law school. And I don't know if I ever shared that with you. I wanted to go back
I didn't know you were in
school.
title, and I didn't know you were considering law school.
Some people remember way back then it was all day Donaldson Title. I worked there for 3.5 years and then I was doing PR, wanted to do something a little more fulfilling for me. And so I was going to go to law school. And then someone said, why don't you get in the mortgage business? And he said, I'll pay for you to
Was
get
that a
your
former
license.
attorney that told you to do that?
Actually, it wasn't. It was a great
A lot of
guy.
times that's the best
I
recommendation.
feel like you have talked to a lot of people out of
People ask me that all the
Out
time.
of getting out.
getting out of or not going to law school.
Just making
No,
sure that you're
oh.
really going to truly
Yeah.
be committed to it, because it is a
Because a lot of
big
people go to law
commitment.
school and then they just don't, they do something
They
else.
don't exactly.
I'm a reformed attorney. you
Yeah,
know.
you are a reformed
Yeah.
attorney, and who knows? Who knows? But this guy just said, "Hey, you all it took was I years ago I thank him. He's still around, and the guy he had a mortgage company, and so I went to work for him, and then 2 years later, and just fell in love with it. Just absolutely fell in love with the mortgage business. 2 years later, opened up my own, and then merged it with NFM Lending 13 years ago. So that's how I landed in the mortgage space.
And it's not just you. I mean, as you've kind of built out your team over these years, I mean, you have Dylan, your son, on
Correct.
the team, right?
So Dylan's been, that's the part probably that one of the things I'm most proud of is no matter what business you're in, really, it's all about the people and, just becoming better and better as a leader and empowering people to lead other people. And so Dylan's been with me since 9 years now. The day he graduated from, his friends are like, you're not taking a break? No, you're off the payroll now.
Yeah.
So he's from UT. So he's been with me 9 years. Yeah. And then, as you know, most of my team, Caitlin's 9 years, John's
amazing.
19 years. Yeah. Ken's
Not a lot
15.
of turnover, which is great.
That's a testament to you and obviously your leadership, because that's not easy to do in any industry, in any team, but to create a culture where people, there's no real turnover is amazing.
No, we've had it, right? And because sometimes
because the
you're not
industry
aligned
too.
to industry, people
Yeah.
get in sales. Like Alan we were talking earlier, and I love learning being a day trader. Because I look at Alan as he's so young, and he's like, it's a real young man's game.
Oh,
And I
yeah.
go, like, younger than you?
Yeah. It's 22 to 26, 27. When I was up for the holiday party in New York City just last week, I mean, these guys are young, new out, and they don't have any really real world professional experience. But, day trading's great because you kind of learn a lot about yourself. But you don't really get a lot of other skills after day trading,
I think the number one thing I'd love for you to share, the number one thing, and you may have gotten it from your parents too, or in a different part, but that you shared with me that you learned from day trading. Do you remember what you said it was, Alan? I'm obsessed with it. I talk about it all the time.
know.
Budgeting.
Oh, budgeting,
budgeting.
right? Yeah. Well, you can have a really
Yeah.
good month, and then you could lose money or not make money for a long time, and so you have to be like a camel.
I mean, it's like the ultimate ground for sales training. in a lot of ways, right?
Yeah.
Because you only eat what you kill.
Yeah.
As a day trader.
No, I mean, I always thought we talked about it
Yeah.
last episode where I've always wanted to be in industries where if you're really good, you get paid accordingly, and if you're not good, then you don't really deserve to get paid. And
Yeah.
I feel like it's probably the same with you guys. There's no you're not getting a salary, from whoever. You're having to, and that's like you're so good at that. I mean, I go to broker opens and I see you there every week. You're always out there. Was that something that you learned from a mentor, or were you just like, this is my skill set, this is my competitive advantage, and this is what it takes. I need to be like a master networker. I love people. Like how because I think you're known now as someone who's like, we look at you, and a lot of times when we're thinking of how to build our own business, I'm like, I gotta like
We say it a lot.
I have to emulate Jane in a lot of ways.
WWJD, what would Jane do?
Yeah.
Yeah.
Well, thank you. That I'm honored, and I think I've learned so
Poor
much.
Jesus.
He understands.
It's almost
I say that.
it's
What
almost
would
Jesus'
do?
birthday.
You're Jewish. I say what would Jesus do?
Well, yeah. What would Jewish Jesus do?
What would Jewish Jesus do?
WWJJD.
Yes. That's a really good question, but I think one of the things that we not only evaluate our misses and our failures, but evaluate your successes, right? Because if you don't know why you're successful, how are you going to continue to reproduce that success, right? So I'll answer your question and then give you a good example of one from this year. You asked about the open houses. So again, raised in town and country, we raised our boys in Odessa.
Mm-hmm.
I really didn't know anybody in South Tampa, and I wanted to start doing business all over Tampa. So it's been probably a good 22 years, maybe ish, that I said, okay, you know what? How am I going to? Because I feel like I knew all the agents in North Tampa,
Yeah.
right? And then back to, just because I think this is important when you're building any business, talking about my experience. God, we just learned so much from our experiences, right? So when I was doing PR for the title company, I literally, my job was go call on all these agents and take them donuts. This is back in the donut day, right? You take them donuts and you physically pick up contracts. So like I did that for 2 years, and I was like, this
People still do that, by the way. We still at the title
Yeah,
company.
yeah,
We get
right.
donuts
But
all the
there's
time
a
from like
lot.
survey companies. Yeah.
Yeah, there's a lot more
Yeah,
to
why
it.
do title companies, all these other companies, just bring the unhealthiest things?
Well,
I don't anymore.
Yeah.
Like-
we do acai bowls and things like that sometimes. We try to keep it healthy for everyone.
Yeah.
You got to keep it healthy. You
Yeah.
know what people want, right?
Yes.
But to your point, so because of that and those relationships that I built, right? When I decided, that gentleman said, get in the mortgage business, those agents knew me as a human being. They knew me as a person. They knew, that I would do what I said I was going to do. And I didn't know, I couldn't spell mortgage, right? Well, I guess I could spell it, but I was a horrible speller. But really,
We'll talk about that later in the podcast.
Yeah. Give me math all day long, but spelling, no. Thank God for all the chat stuff. But they were only giving me a chance, right? So it's that repetition, right? So I learned that, and then I decided I want to move. I didn't want to move markets, but I wanted to expand the market. So I literally said, I'm going to go to open houses, and when I tell you, I went to open houses, and it's a crock pot, right? That's, I think, that everything in life, like, you know what, unless it's just a fluke, it takes time and repetition. Yeah. I would go Wednesday after Wednesday after Wednesday. And I just began to develop like those relationships with agents, and then it's a process after that, right? The follow-up and all that. Mm-hmm. But basically it looks like I'm everywhere, but I'm where I want to be,
really
right?
does.
And with who I want to be with.
That's such a good way to put it.
I've talked to my wife, Christine, about that. When I'm like, oh, it's Wednesday, I need to do these broker caravans if we don't have one of our own. Yeah. And every single time that I go, I'm like, something positive happens. You meet someone new, you find out about a property that's going to come soon. And then you build relationships. Like we've in the 2 years that we've been doing it, we've made a really big point to get to know as many agents as possible, because that's who's on the other side of the deals.
Well, and I have to tell you, I truly thought about this. You are so impressive, because I think about Caitlin's usually with me, right? And I'd go in an open house because I remember when because Greg Wilkerson now met you from Dylan, but
Yeah,
Greg Wilkerson's like, hey, I've got these friends. They're going to be unbelievable. They're going to come in the market and I'm like, oh, cool.
Thanks,
I want to
Greg.
introduce you someday. I know he did. But so you truly were new to real estate, right? I mean, you've got your attorney
New
background.
to the
But
new to
new to
residential
to
sales.
the sales side.
New to the
Yes.
sales side.
Yeah.
You I would see you and I'd be like, do you know Alan? And you knew everybody.
Yeah.
And it's again back to like, okay, it works. Find out what works and keep doing it. It's not sexy. It's not, but it's old school and I think you hit the nail on the head. It's relationship building.
Yeah.
And your reputation is phenomenal among agents.
Well, and that's one of our kind of, I think, founding principles for ASG has always been about collaboration. In an industry that, quite frankly, doesn't necessarily always lean from the agent sales side into collaborating with other agents. But for us, it's like there's so much out there for everybody. I'd much rather have a collaborative relationship with all the agents in our market as opposed to kind of trying to think that like this is ours and we don't want to share or collaborate in any way. So
It takes too much energy
yeah,
to be competitive that
it's
way.
the energy, but it's you go, okay, you truly, I find most people, you either have a scarcity mindset or an abundance
100%.
mindset. And I'll tell you, way back, I had that scarcity mindset. I mean, I was like, oh, why is this lender walking in this open house that I'm doing now? I embrace. I'm like, oh my goodness, come in. What do you do that I don't do? Right? Like, and I think we need to surround.
I think that comes with age.
Does it?
If you're 23 starting out in
that's
real
true.
estate and you need a paycheck to keep the lights on, then it's very difficult to not have a scarcity mindset. But if you are building a company the right way and you have decades of experience in professional services and you have at least enough money to pay your utility bills, then, welcome on the abundant mindset. I have also been to like 8 Tony Robbins conferences, and he always
showing.
talks
Did
about
you
that.
walk on fire? Did you walk on fire?
No, we had when
My sister's done that
when
twice.
we went to Fiji and did it. We had to like climb this like 50-foot pole.
What was at the top of the pole?
You just stand up and then you jump and you kind of like, I don't know. It was.
I am a big fan. I mean,
Yeah.
how could anybody not be? Look what the man's done
Yeah.
for the world, right?
Oh yeah. I'm a big Tony Robbins fan.
It's pretty unbelievable.
Part of your journey should be that type of self-help. So
Well, I love that you said that because in fact, like that, I've always like, I just have this insatiable desire to be better in every area, right?
Yeah.
I want to be the best wife. I want to be the best mom. I want to be the best leader, all of that. And if you're not constantly working on yourself, I mean, and reevaluating how you're going to get there.
yeah.
But so mentors and coaches
Yeah.
and
I have a question, and we're gonna turn it from what we were talking about. And I was talking to Stefan about this yesterday. I was like, oh, I want to ask Jane this. So, you hear a lot about the topic of the housing right now. Kind of, some people are like, we're in a bubble. Prices have in some areas gone up 100% or 50% or 75% since COVID. And then there's some people that don't believe that. But you've been in lending and you might have a unique perspective because you get to see from the lending side. So the last time that there was a big bubble that burst in Tampa was the great financial crisis. You were in lending. So are you seeing any similarities at all? Like, what are your thoughts on housing as a whole? Especially when you were in, like, let's say 2006, 2007, the years leading up to that. Are there any similarities? Do you think it's different now?
I see no similarities.
Okay.
Glad we got that out there.
That's me. I see no
Yeah.
similarities in that we don't need to go back behind the why. You know it. You were in. I mean, I'll never forget that. We have those crazy defining moments in our
Yeah.
lives. We all know where we were when the Skyway got crashed into or the towers, right? I will never. I was sitting at my desk and I watched this no job loan come across my screen.
No job loan.
No job.
Yeah.
Now.
No job, no, like, wasn't it like
it
no
was-
job and no like equity
Yeah.
or like just,
So
No job, no
correct.
income.
yeah,
And
no job,
and
no
that-
income. Yeah,
and that
No
is-
job,
the
no
ninja,
income.
right?
No
The
job,
ninja.
no
Yeah.
income,
Yeah,
no
no income,
asset,
no-
no nothing. Like, so
What could go wrong?
what could go wrong? Yeah, if we're gonna just keep on appreciating. And so back to my point though, there are no ratio loans now. There are loans out there. However, you have to have good credit. You have to have assets, right? There are those what are called non-QM, non-qualified mortgages out there now. So I look at, I mean, that, you were in trading,
Yeah.
what Wall Street, you understand what happened. I see no similarities now. Obviously, so when you say bubble, I don't say bubble.
Just because those underwriting principles are there from
Yeah.
a loan perspective.
100%. Yeah.
Okay.
Have we had correction? You guys, that's your lane.
Yeah.
I try to stay in mine, but
It might be more of just like an affordability thing.
that is exactly what I personally believe is the number one issue in our area, in most parts of Florida, and in many parts, not all, but many parts of the country. So it is an affordability issue, bottom line. And even now, even with the correction, so obviously interest rates shot up. I mean, we have rates, well, that most of them are refied now that we're at 8%. Now we're down to the low sixes, which is, if you historically,
it's like 6 or 7% is like the average, right?
Yeah,
exactly. But you take, again, affordability to teachers. I mean, it's hard.
Yeah.
It's hard to buy a house on
It is.
To me, that's the most underpaid profession on the planet is teaching. So I don't see bubble. I don't see us anywhere.
Well, that's good news.
Is affordability, is that the number one kind of question that you're trying to manage or deal with when you have borrowers that are coming in and trying to figure out what type of products they can get into to be able to afford the type of home that they want? Is that like the number one issue? What other kind of questions are borrowers facing right now that you're having to kind of coach to guide them through?
Honestly, that's probably the biggest one. Now, you guys specialize in the higher end markets, right? The luxury, you specialize in that. And so obviously you're not going to have that issue amongst probably a lot of your clientele, but we work with, I work with the $100,000 buyer and I work with them all, right? So affordability, 100%, because then then we go into inflation, we go into all of it, right? It is, the cost of everything right now. So that, if you're talking about like from a qualification, that is the number one issue I see right now.
And you mentioned earlier you started seeing some refis and refinances from like the 8% down to now the low sixes. Are you seeing an uptick in refis?
Yes, there's definitely, you should look at your pipe. They're in there.
Yeah, I know. we are seeing it. We're starting to see the beginnings of, I hope, another refi boom for everybody to be able to get into a more affordable rate now that rates are starting to hopefully tick down.
Jane, what would is there like a mathematical equation you would do? Like when do you refi? Like what % off do you need from and then how long do you need to stay in that house? Is there like an easy thing for people to know?
No, I'm really glad that you asked that question because that's a misconception. 2%. Alan, we took one, I don't remember what it was, like a 1.2 million. We took it down 3/4 of a point. Makes sense. If it's a $300,000 loan, give or take, it might need to be close to 2%. So again, it's all about the math, right? What's the recoup period? And just because, like,
when you say recoup period,
recoup from closing
so
costs. Okay. Yeah. Like and then again, everybody's situation is different. How long are they going to stay? Are they planning on staying in that house? So if you can recoup, those costs fairly quickly. So the clients that we've been refinancing, they have been and been able to pay a lot of their closing costs. They're recouping very quickly because this might be a 2-step process for them. If they go down again next year, then when I say recoup, we'll do it again, but they haven't lost any money because they recouped it in 6-7 months.
Because you're able to bring the closing costs down to a place
correct,
where you're able to...
Correct. So it all depends on the loan amount, Alan. Yeah. That is the biggest factor.
Do you guys suggest, or do you let the borrower kind of whatever they want to do to lower their payments or to shave off the time? Like when you're refining, you can either restart the 30-year or whatever you're doing, or you could just take this, have the payment stay the same, and it's just not as long of or just more to principal, right?
Yeah, and that's another really good question. And I think that's another thing that I just love so much about what we do. Like, that's a very personal question, which we ask, right? We know everything, right? We've got their credit score, their
It's a
how
very
much
intimate
money they have.
relationship that you have with
It's
a borrower.
very
Yeah, I
intimate.
mean,
We know, yeah. We
Jane,
know
you should have to
more.
show your income statement, your personal finance to to even it out.
I will tell you, it's pretty impressive, but it wasn't. And I'm very like, if I will show you I will show you, Alan, from, you mentioned back 2010. Oh my God, 2010, it was nauseating. I have it. I still look at it and just said, okay, I mean, I'm on the verge of bankruptcy. Like, I borrowed money from my house to pay
Yeah.
employees. Like, I made all the mistakes.
Well, it's just it's a
Right.
relationship
Hard
that's really
decisions.
one-sided. It's like,
Yeah.
with
It's-
like a therapist, it's like they know everything about you and you know
Exactly.
nothing about them.
And
your
I
accountant, yeah.
think the thing is, because I've been through those times, like, I've been like, you can ask Dylan and Kellen, like, we were going on a trip. Trips canceled. Like, we're eating beanie weenies. Like, are we going to be able to
Beanie
keep this
weenies.
house? Like, it was, you know, I've been through that, and I learned. Now, when you see people do it over and over again, and now I do this because I love to, right? So everyone's different. If I'm looking at someone and they're just, they want to keep up with the Joneses and they're habitual spenders, that person I'd rather put in a 15-year fixed mortgage, because they're just not going to save
That money's
money.
going to be spent
They can't
anyway.
help it,
Right,
right?
They
right.
don't need to see that extra
That's
money
your way
in
to
their
help
account.
help them get out of their own way.
Help them get out
Yeah.
of their own way. So, and it's really interesting, Alan, because we've really been work our database, right? And everybody has a different story, right? Like, some people need to pay debt off, right?
Mhm.
Some people, I can't tell you right now how many people have actually pulled some cash out. And in fact, literally got an email this weekend. Hey, Jane, guess what? We paid our house off. True story. We paid our house off, but we want to do a cash out refi because we want to buy another property.
Oh wow.
Yeah. So everybody's different. And
Yeah.
that's what we love doing. We're just not going to say, oh, this makes sense for you, because it might make sense for you, but
Yeah.
not for you. or
And that's
for
like
me.
the personal touch that you add, because you
Exactly.
know these people. You're like in the community. You're not just this big bank that sees a spreadsheet and says yes or no. It's you get to know
Ugh.
the families.
No, I want to lay my head on the pillow at night and
Yeah.
know I did the right thing, right? Always do the right thing.
That's such a difference maker too. I mean, in this industry, and that's part of the reason why we love, obviously, having you as a preferred lender with our borrowers, because we know that they're going to get that personal touch. We know that they're going to be basically counseled that it's not a one size fits all approach on the loan side. And then from us, from the agent perspective, I mean, we truly feel like you are a partner of ours in any transaction, which you don't get that at a big
No,
bank.
definitely not. Yeah.
Yeah.
We are. It's so
Yeah.
exciting,
I'll call
right?
Jane's
So
son
exciting.
on a Saturday and just be like, I called him a couple weeks ago. I was like, Dylan, what do you think about 50-year mortgages?
And he's like, Alan, I'm fishing right now.
Yeah.
Leave me alone.
He has a baby now.
Yeah.
The
Oh,
world
that's
has
right.
changed.
That's true. Yeah, yeah.
And he talked to me for like 30 minutes. It was amazing. So I think we'd be remiss to not ask you,
That's
because
a
we
great
did talk
point.
about it on our first podcast, just as two agents talking. But what is your gut say, and what are your thoughts on 50-year mortgages?
Okay, so I'm going to give you my thoughts, and you're laughing.
I can't wait.
You're laughing because I know you're totally.
Well, but like you said, it's not there's no one size fits all. But yeah,
There's no one size fits all. So here's the thing, and I get, if you just look at it like you compared it to, it's like buying a car, right? It's a depreciating asset. So, but the thing is, here we go back to affordability, right?
right.
So if you, and then it's not a whole lot different than those interest only loans. Great for some people, horrible for others, right? If you're making that interest only payment, which a lot of people did, and you're taking that delta and you're investing,
Yeah.
oh my God, you're creating arbitrage, you're building wealth, right? But it's got to be for that purpose. It can't be just because you can't.
You're just
afford.
buying wine with the extra money.
Well,
then
you
maybe.
and I are buying
Which
wine,
is
right?
what you do,
I know. I told my husband, I think I'll cut back on
Then
my
we're
wine
happy and
budget.
broke.
That budget line item sometimes is.
I did cut back for a while. I'm okay. So, but truly, it sounds horrible, like 50 years, right? But let's go back to those two teachers, right? Unless you believe that we are in a bubble and the market is going to tank, if you believe that, then it's probably not a good strategy. I don't believe that, but I don't believe that. I think we're leveling. I think we just look at all the whys behind why people want to be here.
Yeah.
There's a lot of them, right? A lot of them. We don't need to go into all of them. So if that $200, $300, $400 difference, depending on the loan amount, you can get someone into the dream of homeownership rather than paying someone else's rent and make them wealthy. I'm all in. I'm all in.
No, I get it. And then like we've talked about, they always have the ability in 2 years, 3 years to be able to refinance into something that's maybe a little more conventional if they're going to stay.
And the other thing too, you may or may not know this, and to be honest with you, because it's just right now, it's just being talked about, right? Even when the 40-year came out, there's probably going to be hits on the rate. So we got to look at all of that. We just don't know,
I get it. It's a great way for someone that's, like you said, it's a bridge to be able to
That
get
can
someone
only
into
get-
home
yeah.
ownership.
And you don't believe prices are going down.
Right. And so then when you're looking, if this comes to fruition, then do you help work with the agent to say, kind of like we talked about, there's micro markets in Tampa, right? So not every home is created equal. Not every neighborhood or market in the Tampa Bay Area is necessarily created equal from an asset valuation standpoint, I guess, if that makes sense. So then are you looking at the neighborhood and saying, hey, maybe this loan product, this 50-year mortgage, doesn't necessarily make sense because historically speaking, this area, part of Tampa, hasn't appreciated at the same rate as some of the other neighborhoods or areas? Or is that not necessarily?
No, Stefan, because I feel like, again, and you guys know me well, I really, even though I told you I love real estate, I love investing in real estate, I stay in my lane. And I think, again, it doesn't, if you believe, like, would you really put someone in a house if you thought that I guess if I think about this, okay.
The
if
answer
you
is no.
thought,
No,
if
no.
you thought the price was going down, you probably
No.
wouldn't
No,
do it.
no.
would
This
you?
is where the agent counseling comes into
We're
play.
not just trying to
Right.
Yeah.
get paid. 'Cause
No.
that
Right.
makes no sense.
Yeah. So I didn't mean would you, but I don't think you would do that. So I don't, that would not come into play with.
But to me, that's where like the partnership and the communication between all
Yeah.
the different players for a buyer
Right.
comes into play, so that everyone's on the same page and has the same goal in mind, where it's not just a transaction
It's
or a
not.
closing. This is,
Exactly.
we're trying to create a holistic financial win for this buyer, while also obviously putting them in some place where they can create a home for them and their families. Yeah.
Yes.
So outside of the 50-year product that might come but might not, do you think there's any other like underutilized loan products that people are kind of just don't know about, or something that you would like to talk about that you think would be helpful?
I got to tell you, the non-QM loans are really prevalent right now. They're the non-qualified mortgages, and I'm doing more of them than I ever have in my career. I mean, not a high percentage, but more than I have. And I believe it's the people that are really studying the market. And I was so happy. I had this buyer say this to me on Friday before I said it to him. He's like, yeah, he doesn't have to buy right now, but he knows that, he said, I know that when rates do go down, there's going to be, it's supply and demand. There's going to be, there's going to be, more demand, and then prices will go up. So he is in a hurry to get into something now. So when it comes to like, there's the DSCR loan, a lot of investors are using. If you can, it's basically just cash. You don't.
I was gonna say, for those
cash
listening, what is a DSCR loan?
It's basically, you do not use the borrower's income. Now, they have to have good credit. They have to have 20%
Right.
down. But it makes sense. You think about logic. You are telling us, hey, this property is going to rent for X amount, right? And that's what we're qualifying on. This is purely an investment property.
So you're
right?
really underwriting the asset.
Exactly.
Yeah.
Exactly. It's
Do you-
the collateral.
How do you
Right.
underwrite it in terms of, do you look at it, if obviously it might be easy if there was like a long-term renter in there already, or if it was an Airbnb that was performing and has data, like how do you guys?
Well, there's all different. It depends on the, like with Airbnbs, like you have to have 2 years on the tax returns. But if it's just like I find, so right now, some people are buying, we have incredible second home and investment. We have an investor with pricing right now. So a lot of people from up north that might, are going to want to retire here or buy second homes, they're buying now. So like if you're using, you can just use, if it's a year rental, you can just basically get a lease, or you can get the an appraisal that shows the rent rolls. I mean, it's just data driven. It's all data driven. But then back to your first point, these non-QM products are really strong right now for someone that they don't fit in that box, they don't fit in the box.
Are you seeing that more and more in terms of, I feel like entrepreneurship is on the rise.
Yeah.
So like W-2s are maybe not as common as they were 20 years ago with the rise of AI and like, internet jobs. And so, even for me as a day trader, I never had a salary. And so it was difficult. When I was getting a loan, not only had only been day trading, I then decided to take a year off of work and travel with my wife, which apparently is not a good idea if you want to get a loan, like a mortgage.
You found that out?
That's why you should have asked Jamie before you guys left.
Yeah,
you live and you learn.
Found that
But so you're seeing, a rise in entrepreneurship.
Yes,
so,
correct. I absolutely am seeing that. Yes.
Are the loan products keeping up? Because I know you already mentioned one, but are they keeping up with this kind of change? Because it seems like I don't think this is going to go away.
Well, I know the big
anytime
banks
soon.
don't. If you're not a normal W-2 salaried person, like big banks don't like you in terms of like.
Well, and it really goes back to guidelines, agency, Fannie, Freddie,
Right.
Ginnie on the govies. So there hasn't been
So many cool things were just said. What was the
well,
last? What was the last thing?
sorry, like
I think it was
these
a
are
new
the
restaurant.
agencies, right?
We're gonna do
So-
we're gonna do an Instagram reel about Ginny and Kevy's.
Fannie Mae, Freddie Mac. So, but guidelines have not, they haven't changed dramatically over the years. At the end, now what's gotten a little easier, like it was that you're self-employed, 2 years tax returns.
Mhm.
Now, if you've been self-employed for maybe 5 years, we could get away with one, but you're still needing those tax returns. So your scenario is a really good, like you're a super intelligent guy, right? But a lot of people, you do what you do something else for a living. They'll be like, yeah, can I get a loan? And you're like, but I'm a day trader. I just took a year off, but it's okay because I got money in the bank and you
Yeah.
got good credit.
Well, I remember
and you're
Wells-
like, you can't give me a loan?
Yeah.
Well, I can, Alan, but you're going to pay an
cost,
higher
right?
interest rate because it's going to be a non-QM loan.
When I was asking Wells Fargo to get a loan during that time, they basically, I had 15 years of really good income, but they were like, and I had a letter from the company that I was working through saying that they allowed me to go on my vacation and I'm still like employed and all that. But they said because you haven't had a pay stub or paycheck in the last 4 or 5, 6 months, that they considered me unemployed.
Yes.
And they're like, so I couldn't use Wells Fargo.
Well, you pretty much were.
Yeah. Jane's like,
You were vacationing.
these are the
with
guidelines
your
and these are the
beautiful
facts.
wife.
I was eating pasta and drinking wine.
And drinking wine.
You're still looking at the market probably when
as
you
you
woke up in
should
the morning.
be. You saved money.
That's working.
Whatever.
From 6 a.m. to 8 a.m. Seeing green or red.
Yeah. Red. It was
Or red.
2022. The market was down that year.
Yeah. That's why I took the vacation.
Yeah. I should have just sold everything first.
Yeah.
But
Everything happens for a reason. That's what led you to
exactly.
real estate and to ASG.
It is.
Yeah. And how we're here today.
Into your partnership,
Yeah,
right?
exactly. We kind of have talked about it, but as we head into 2026, I mean, where do you see the mortgage industry in 2026 and kind of beyond? I know we touched on some of it a little bit, but I mean, is there anything else? Where do you see rates heading in 2026?
And do you think people are too obsessed with where rates are? Like, is that it's always,
I know
people talk
it's a great
about.
headline.
Those are both great questions. And yeah, gosh, Alan, people they still are. It's gotten better, but obsessed is a good word. Like it is the rate conversations. Like
It's like they're day trading the rates. It's like, stop it.
I can't wrap my brain around the times people have said that can buy, have the ability to buy, are crammed in a house that they're having more, whatever, for whatever reasons want to buy, but just because they can't get 3.5%. I mean, it is maddening.
We see it all the time, obviously, on the agent side. Yeah, I mean, people are.
If you can get
Right,
2.5 or
obsessed.
3.5%, like if we can get that again, that is probably bad news macro wise. Like they're only going to artificially knock down rates if something bad is happening.
Yeah.
So
Why do you think people are so obsessed with that? I mean, I know it's been drilled. Well, one, everyone got spoiled for all these years of artificially.
it's just
low
the way they
rates.
raised the rates. It was
Yeah.
basically zero forever, the Fed funds rate. And then I think Powell raised rates like 8 times in 1 year.
What a mess.
And so you go from getting a 2.5 to 3% mortgage to a 7% mortgage in less than 12 months. And then but now it's evened out,
I mean,
It's
it was a
gotten
struggle
better.
for me because we had a 2.5% in our
Yes,
in our
you
old
did.
house. That's right. And
it's psychology. People get anchored.
yes,
With prices, like, home prices. People in 2020 didn't want to buy because they thought Tampa was too expensive. And then, it doubles. And then they're like, oh, well, I'm waiting for prices to come back to 2020 prices. And you're
But
like,
we're
"Oh."
seeing less and less of it. I mean, I think the average rate this morning or Friday morning is like 6.17, 6.2, something like that. And, we're getting back closer. Alan, I am saying Alan because he was a day trader, but where that 10-year, was at what, 417, something like that 200 basis point spread. So people, the low sixes and you can get, I mean, that's palatable for a lot of people. So still hearing it, but not near as much. Thank God.
Yeah.
And then honestly, like if you look at everyone's predictions, people, I mean, I don't care, honestly, I mean, they're predicting rates to go down at the end of 26, right? But not a ton,
So you think we kind of stay in this like 6?
I think they're predicted in the mid to
high
fives, yeah, ish, right?
That'd be great.
It exactly. Yeah. So that's why I think we're seeing like this has probably been these past couple weeks. I mean, we're sitting here, what's today? December 22nd. I mean, wow. Like it's been busy. Like the activity, our leads were up last week. Our contracts are steady. And I've had 4 agents say, I kind of wanted to slow down a little so I can get ready for the holidays. But I'm thrilled going into January because historically January is one of our, slowest closing months. So I do think people are
the psychologically
realizing that you're not going to see the 3.5s again. You're not going to see the 4s.
And life doesn't stop for interest rates. And so things happen. So people eventually, you have to make a decision to make a move and accept the fact that this is the new market reality, I think. Yeah, I agree. I think this is probably what we're going to see for a while. And like you said, I think it's a good thing. As much as I miss my 2.5% interest rate.
It's painful. It really is, right?
Yeah.
But you're in a beautiful home and life is better.
Oh yeah, 100%.
Beautiful home with a 7% interest rate.
We did better than that.
He's not that high out.
No. We'd be the 7.
He beat me up. No.
Yeah, right. I wish I could, but no, I can't. I didn't have to because you did such a great job. There was no
you got a great rate.
battle. Yeah.
For this relative,
Yes, exactly.
I think we're probably should wrap up and do some rapid fire.
We
questions.
do, yeah. We like to end every episode with kind of a fun...
We like to end every episode, but this is our second one.
Well, the audience doesn't need to know that. In my head, this is episode 99. We want to end with some just quick rapid fire questions. So I know, and by the way, Jane has not seen these questions. She has no idea what we're about to ask.
So you have questions written down.
Jane, what's your favorite bottle of wine?
I guess I'm gonna. Oh my God, it's you know it. It's a. I was gonna say Contessa, which is a cab, but it is an Amarone.
Ooh, I've been drinking a lot of those lately.
I can't think of the name of it. I'm sorry. It's incredible.
I'm gonna be in
expensive.
Amarone wine country, which is near Venice, in May. So we got to figure that out, and I'll try to go to the winery and get an allocation.
Done. Holding you to that.
We love wine. We love food. So what's your favorite restaurant in Tampa?
At least right now.
Yeah, right now.
At least right
now. I know there's so many. It's a tough one to.
It really
to pick
is.
one.
I'm such a foodie. Golly. I know that's ridiculous that I just can't even answer that. That I don't.
What's the last meal that you had in Tampa that you're like, damn?
That really blew me away.
Shit. Yeah.
How about New York? Since I was just there. No, I'm kidding. I guess I'll just go with Eddie V's. I love Eddie
Yeah.
V's.
Do you ever
Yeah.
do you ever sit at the bar and have Roxy bartend for you?
Oh, are you kidding? Roxy's one of my besties.
Yeah.
Like Roxy's the girl.
Yeah.
Are you dancing when the band comes out to play? That's like one of my favorite places to
It's
sit at the
so
bar.
fun.
Live
like
music.
just so fun.
Yeah.
Yeah. Before we moved, that used to be our Hank and my Friday night date night every Friday because it was like 6 minutes from our house.
Jane, you have to come to our Gasparilla party that my parents throw because we have Roxy
heard.
there.
Oh, Roxy does the
Yeah.
Gasparilla party?
Yeah. We have Eddie V's come
Oh, yeah.
and do the food. And, yeah.
Oh my God. She's the best.
Yep.
She's the best. But it's all football. Like I cannot get away from football talk ever. That's okay.
Are you a Bucks fan?
I mean, I have to be, right?
Yeah,
Yeah.
of course. You guys
Yeah.
are season ticket holders, right?
Yeah.
Yeah.
No. We gave
Oh,
him
you're not?
up. Hank was
Oh.
from day one, but he gave him up. But now Dylan is.
Okay.
So, yeah.
So it's still in the family.
It's still in the family.
Okay.
Yeah. I have to listen to that every Monday morning with the team. Everybody has to talk about like the Bucks.
yeah, unfortunately.
Unfortunately,
Today's going to
this
be a
morning,
painful
it was like,
conversation
yeah.
this morning. We were talking about it last night
It
with
was
some
painful.
people. Yeah.
If they win the next 2 games, I think they're still in it, right?
They are. I know
Yeah,
that.
but I almost feel like that could be the worst thing that happens
Yeah.
for the team because there needs to be a fundamental coaching change, I think. Anyway,
I'll
I
stay.
don't want
I'll
to go down
keep
the
my
rabbit hole on the
comments
Bucks.
out of that.
All right, Jane, if you weren't in lending, but not even in anything real estate adjacent, what would you be doing?
You know, something at this stage in my life, it would just be something along the lines of nonprofits. Like I'm just so passionate about all the nonprofits in the community and serving on boards, and that's just where my heart is now. Yeah.
Great.
No attorney. I got that
Yeah.
ship sailed.
You're not going
Yeah.
to law
Yeah, I
school?
passed that a long time
No.
ago. Yeah, you're one of the few I love.
I hear that a lot.
You need to meet my dad and my sister. They're wonderful.
There are some
I
lovely
know,
attorneys
I cannot
out there.
wait to meet
Yeah.
both of them. I've heard. Yes.
At the Gasparilla party.
Yeah.
Yay.
And if you need estate planning, Schonbrun.
Oh,
Schonbrun and Schonbrun.
Schonbrun. Plug it.
Our
plug it.
second sponsor of the
Yes.
of the episode. All right, one or two more. So
Yeah.
what's the best advice you've ever received in business?
Pour into people. Pour into people, man. Develop your people. It's all about who you surround yourself with. And that's what I've really, focus on.
And then an even more serious question to end
Ooh.
it. What is your go-to coffee order and coffee place in Tampa?
My go-to coffee order is a non-fat, no-foam extra hot latte
Is that all?
with whole milk. Non-fat, no-foam
Caitlin's
extra
like,
hot.
yeah.
She knows.
Caitlin knows.
She knows. Honestly, I go to Kawa almost every morning.
Okay.
I'll go to Buddy Brew when it's more convenient. And you know where else has a really good latte is Toffee to Go.
Toffee to go?
That's my new place to meet
Oh,
people.
Does coffee?
interesting.
Like I shouldn't be saying it because yes, they have great coffee and they have great hot chocolate too. Hank
Maybe
got one
Toffee
the
to
other
Go can
day.
actually be our first real sponsor instead of countries and lands in Burgundy.
Yeah.
Yeah.
And it's such a cute little place to meet people, right? So yes, I love that. Yeah, that was easy.
Chef and Baker too on Manhattan. They've got really good coffee. And
Wait, I need more places.
I was gonna
so I'll
say
have to-
one more spot for
text
you.
me.
SOG Cafe
Oh.
right here on Interbay
Hold on.
is unbelievable.
But that
So
used
sorry.
to be Spatty's.
It's-
the coffee used to be Spatty's there, and now it's just SOG.
It's just SOG. Yeah.
I stopped there yesterday. I was
Oh, you did?
visiting Kellen and my new grandbaby,
Yeah.
and I ran in there.
Congratulations.
And you know what? Thank you. It was amazing. I had a latte yesterday afternoon, and it was fabulous.
And the owner is
Glad you
one of
said that.
he's the nicest guy. He's always
Oh, I
there.
love supporting local.
Yes.
Like, yeah.
That's Nina and I's our go-to spot.
Oh, I love that.
Yeah. Well,
Okay,
sometimes
that's
I'll
my
bike up
new-
there with the boys and we'll grab coffee on Saturday morning and then bike back.
Oh, I love it.
Yeah.
I love it. Awesome.
Well, I have a million more questions I could rapid fire, but we'll do those over wine. But
Perfect.
thank you so much
Oh
for
my
joining
gosh,
us.
Honored. Thank you.
We are honored. We've been
First
honored
guest,
to have you.
Jane.
Yeah.
You're
Wow.
our first guest.
When we were thinking about who should we have as our first guest on the podcast, it was never a question. The first name I said was we got to have
Aw.
Jane.
guys are just
So,
thank you.
yeah.
Thank you
I'm
so much for
humbled,
joining us.
honored, Appreciate you.
I will for our listener. For our
We
listeners,
only have one. Christine out there, my wife. Thanks for listening.
Christina.
Love you, baby.
Yeah. Well, we're just starting out, No, for those listening and watching the podcast, what's the best way to reach you and your team if you have a need on a loan?
Caitlin, what's the best way to reach us? Oh, 813-758-8334. Thought she was going to give me all the
All the handles and everything.
techie stuff.
We'll include that
Or
Yeah,
just reach out to us
Yeah,
and
yeah,
we can get you in touch with Jane.
Yeah, the easiest way is if you're a
Jane
buyer looking
Floyd.
for something, contact us, and our first
We'd love to talk
our first
to you.
connection is going to be to Jane and her team.
There you go.
Yeah. So
Thank
thank
you guys so much.
Yeah,
Thanks,
this was
Jane.
great.
All right.